President Donald Trump's aggressive tariff policies are sending shockwaves through American households. A growing number of companies are adjusting their pricing strategies in response, sparking concerns over rising costs for everyday goods. The tariffs include a 10% baseline on most imports and a steeper 30% rate on a wide range of Chinese products. Certain items, such as steel and aluminum, face even higher duties. Retailers have pushed back on the suggestion that they should absorb these added costs, warning instead that prices on essentials, from food and apparel to electronics and vehicles, are likely to climb. Walmart is among the most recent major retailers to announce that customers will soon see higher prices, citing tariffs that have become unsustainably high. Other prominent brands, including Ford and Best Buy, have also indicated potential price hikes on the horizon. The companies listed below have either confirmed or hinted at price increases, regardless of whether they directly attribute the decision to the new import taxes. On April 15th, Walmart disclosed plans to raise prices, specifically pointing to the increased cost of Chinese-made products. CEO Doug McMillon, during a quarterly earnings call, said, "We're committed to keeping prices as low as possible, but the scale of these tariffs, even after recent adjustments, makes it impossible to fully absorb the impact due to our already tight profit margins." Walmart's chief financial officer, John David Rainey, added that the price increases could begin by the end of May, with more noticeable hikes arriving in June. Toy manufacturer Mattel echoed those concerns. On May 6, CEO Ynon Kreiz told investors the company would also be adjusting prices in response to tariffs. While around 40% to 50% of Mattel's products are expected to remain under $20, Kreiz emphasized the need for eliminating tariffs on toys and games worldwide. In a retaliatory move, Trump warned Mattel that he might slap a 100% tariff on their toys, stating it would effectively block their sales in the U.S., their largest market. Best Buy raised similar alarms during a March earnings call, cautioning that many of its suppliers are likely to pass along some or all of the tariff-related expenses, making consumer price increases very likely. While some electronic items are temporarily exempt from the new tariffs, that protection won't last. For example, Nintendo delayed pre-orders for its Switch 2 console due to uncertainty surrounding tariffs. Although the console's base price remains $450, the company announced that accessories would cost more than previously stated, attributing the shift to market conditions. Sony's chief financial officer Lin Tao, speaking during a company call, also acknowledged that rising costs could be passed on to consumers. Chinese online retailers Shein and Temu, which had largely avoided tariffs thanks to the minimized exemption for shipments under $800, were dealt a blow after Trump signed an executive order eliminating that loophole. As a result of recent global trade changes and new tariffs, our operating costs have increased, Temu said in a public update. To continue providing the quality products our customers expect, we will implement price adjustments starting April 25, 2025, a message echoed by Shein. Both companies have since increased prices on select products. On Temu, for instance, a set of patio chairs that sold for $61.72 on April 24 jumped to $70.17 the next day. On Shein, a bathing suit set that cost $4.39 rose to $8.39, an increase of 91%. Imported vehicles have been slapped with a 25% tariff, and most auto parts are subject to similar duties. While some car manufacturers may qualify for partial rebates, those provisions could be temporary. Ford's chief financial officer, Sherry House, announced that the company anticipates increasing prices on its U.S. vehicles by up to 1.5% during the latter half of 2025 due to the tariff impact. In response to consumer demand ahead of the tariff deadline, Ford has extended its employee pricing promotion through July, encouraging buyers to act before costs rise further. Japanese automaker Subaru also confirmed that it will adjust its U.S. pricing to address higher operating expenses, referencing current market dynamics. While no specific figures were provided, the company emphasized that the changes are intended to preserve overall value for customers. These pricing adjustments help balance increased costs while continuing to offer strong value, a Subaru of America spokesperson explained. Our pricing strategy is not determined by the country where our products are manufactured. Meanwhile, Household goods giant Procter & Gamble, known for brands such as Pampers, Tide, and Charmin, stated during an April 24th earnings call that price hikes are under consideration in select categories and regions. That same day, CEO John Mullen noted that consumer prices will likely rise as tariffs generally tend to drive inflation across multiple sectors. Stanley Black & Decker, the company behind several well-known power tool brands, implemented price increases in April, averaging in the high single digits. Additional price adjustments are expected later in the year as cost pressures continue to mount. Sporting goods and apparel company Adidas also warned of rising prices for U.S. customers, linking the uncertainty in international trade talks to potential future increases. With the ongoing lack of clarity in negotiations between the U.S. and key exporting nations, it's difficult to predict where tariff rates will ultimately land. Adidas CEO Bjorn Gulden said in an April 29th earnings statement. He added that cost pressure stemming from these elevated tariffs will, over time, lead to upward pricing adjustments.